Hello, it's Adil bringing you a review of the European markets, or end of day analysis of European markets from an intermarket analysis perspective. Okay, so let's get started, folks. Okay, one hell of a rally, very impressive rally today. Started obviously from Asia. The Nikkei and Shanghai was higher, and the Hang Seng were higher overnight. And now obviously we've got the FTSE closing higher, the Eurostoxx, the CAC, DAX, Swiss, IBEX, Athens, MySex, basically more or less up at the moment. You've got the S&P 500 and the Dow currently trading at the moment. The S&P is currently trading negative, and I'll certainly try and explain and elaborate upon that. Okay, let's start with the fundamentals first of all, as I always do. Okay, so fundamentals, basically we had the obviously Asian markets higher overnight, so the market should have technically moved higher or short squeezed higher from the outset. That wasn't the case really, although we did have German data that came out slightly better than expected. The unemployment numbers obviously dropped, but then we had concerns regarding Greece. We had some anti-QE comments out as well. Obviously now we've got talk about Greece needing a 30 billion euro bailout, etc., much bigger than expected, and a black hole, and so on and so forth. We had negative earnings from Bayern and Alliance today as well, Bayer and Alliance, and technically we should have paused there and then, but the markets obviously had other ideas and continue to short squeeze higher. Obviously the uncertainty regarding Greece and like I said, the anti-QE comments, I expected to put a pause on the markets. That obviously wasn't the case. We also had the CPI data that came out. The core actually came out slightly better than expected, and real earnings, which obviously signifies wage inflation, coming out better than expected. I also expected that to certainly stem the tide, and that obviously wasn't the case either. That's one of the reasons why the US markets are obviously lagging at the moment, given the fact that the S&P 500 is negative. The Dow more or less is flat at the moment as we speak, potentially negative. And the Nasdaq itself, although it didn't move higher on the net neutrality news just now, but given the fact that the news regarding China and Apple, potential US companies obviously losing their privileged status there in terms of government spending, given the fact that the NSA and Snowden leaks, etc., have exposed US companies obviously having chips within their components that obviously allow them to spy, which again, interesting. So much for freedom of information and freedom of speech. I mean, it's a bit too free, I think, especially if the CIA is obviously spying on you. So the Chinese obviously are not happy with that. That's why they no longer give US companies that preference, and it will all be Chinese companies, which really makes sense, to be honest with you, if somebody's caught cheating and stealing your information. Okay, so, or invasion of privacy. So basically, that was the situation. Also, we had Hewlett Packard earnings that's slightly negative, and obviously the net neutrality news with regards to the Nasdaq should obviously have put obviously created uncertainty, doubt, and fear, and especially with the Apple share price selling off. Okay, so the whilst I talk, the oil price is obviously making a new low. It's actually making a new low. It's at $48 now. So again, if the stock market was so bullish, if everything is so bullish, then why is oil making a new low? So again, this is not making sense. Okay, let's put it that way. It is not making sense. Everything is very, very confused right now, and there's a massive divergence. Okay, so let's have a look at the markets now from a intermarket analysis perspective, from a technical perspective. The FTSE 100 on the daily chart, 60-minute, you can see there's a H&S formation. Daily chart, we have a rising contracting wedge, which is a bearish pattern. Europe itself is the only standout really. If I start looking at the German DAX, we have got a rising contracting wedge pattern, so we are in that upper channel resistance. Weekly chart, as you all know, we're breaking out, very, very bullish. You can't really argue on the weekly chart basis. 60-minute chart as well, one can't argue. I mean, we obviously broke out this wedge, which I was expecting to hold. The market obviously has other ideas, and its price action is obviously the king, and the market obviously is pushed up and pushed a new high, so we just have to respect that and continue. I mean, I did expect that resistance level up here to hold, and even that didn't hold. So again, trend lines only work to a certain extent. and its fundamentals that would dictate. So given the fact that the economic data out of Germany came out better than expected, then obviously that's propelled the markets higher, regardless of what the situation is in Greece. We all know that that remains uncertain, and that certainly has a negative bias. But yeah, the markets are totally ignoring that altogether. We also had Mr. Weidman back on the back under the spotlights, and again he was very negative. We also had another chap or individual from the Bundesbank that was actually negative, that was talking down QE, and the need for QE wasn't there. And obviously German data is confirming that. I mean, if unemployment rate is dropping to such an extent, Germans are worried about inflation getting out of control. So given the fact that every central bank in the world now is trying to cut rates, and it's basically creating this inflation bubble, and it has to go somewhere, and nobody wants that inflation bubble obviously within their country or within their specific parameter, and the Eurozone certainly doesn't want that. Yes, it is fighting deflation, but I think everybody has gone too far now, and it will eventually create this inflationary spiral, which everybody has to be ahead of the curve. And whoever moves the quickest, i.e. if we've just had a BOE member now talk about a rate rise, okay, Mr. Shafiq from the BOE has stated the next move will be a rise. The US markets today, inflation or real wages are starting to pick up, so again the next move is going to be a rise. And given the fact that the Aussie has been clobbered, the Kiwi has been clobbered, the Euro has been clobbered, technically it's a dollar move. I mean, if you bring up the US dollar chart, you can see the move here. So if I bring up the chart of the dollar, here we go. Okay, so one hell of a move or thrust higher on the daily chart, as you can see, as soon as that inflation data kicked in, and the markets obviously are going into that level. Now this inflation data will certainly cause this market here to close a gap, and like I said, Miss Yellen was neutral. She wasn't as dovish as everybody expected, so a lot of that's been taken out of its context. So that's been taken out of context. So given the fact that the economic data obviously came out today, certainly dispelled the myth with regards to Miss Yellen being super dovish. She has to go according to the economic data and what the data states, and there's an unfilled gap, like I said, on the 60-minute chart, and today's data obviously gives the ability to close that gap. Let me just get rid of all these trend lines here, and also this level here. We obviously only had support that we had was down here, and obviously that held, and you can see a gap higher and gap and go. We are potentially coming up into resistance here, and like I said, the ultimate is gap fill up here. Okay, so that's basically where we are in terms of the US dollar, and that's one of the reasons why the oil price is obviously making a new low now. It's currently $48 as I speak, and that certainly isn't good for global markets, because obviously oil is a representative of growth, and even the fact that they've attempted to talk up oil and claim that it's stabilizing, it still isn't stabilizing. Okay, so that's certainly something to take into consideration. Okay, so that's the German DAX then. Okay, so again, 60-minute chart, very bullish. Whether you want to attribute that to a lower euro, whether you want to attribute that to a stronger economic data out of Germany today, yes, I totally agree, but the market certainly has priced all that in now to a large extent. I mean, the German DAX is up quite substantially. I mean, we've moved from, I mean, this move higher has been quite stellar. I mean, from 9,000 now to almost 11,000, 12,000. I mean, how much do we factor in or discount in the strong economic data? I mean, it gets to a point where it's all baked into the cake. Okay, so I'll just be very, very careful up here from my perspective. And like I said, the Greece news still remains unresolved, given the fact that the vote today had 22 German individuals or German politicians vote against it. Okay, and given the fact that the bailout is much higher than expected, I can see Germans certainly opposing that and turning against it. Okay, so that's certainly something to take into account. Okay, so that's the state of the German DAX. Let's have a look at the French CAC daily chart. At the moment, certainly keeps making higher highs and higher lows, so very hard for anybody to really argue to the counter or to the contrary. Okay, the French CAC at the moment today, we did have some negative news out of France with regards to its ability to adhere to the austerity path. So again, that's potentially negative, and there was some disagreement with the EU and France, obviously. So again, that's certainly a very interesting sign from my perspective. And like I said, given the fact that the euro sold off quite substantially post the Greece news, the equity markets are totally unfazed, which is quite phenomenal and quite interesting. So again, whether this market is in cuckoo land and has become too bullish and certainly isn't factoring in risk off, that certainly needs to be taken into consideration. From my perspective, I am expecting this bullish channel to break, and obviously look for a potential unfilled gap to close below, given the fact that these markets have become very frothy again. I can't just do that based on technical charts because daily chart is very bullish, but I have to go on fundamentals. Even though the Asian markets are higher, I still expect a risk-off scenario given the fact that Greece remains unresolved, and obviously I mentioned the austerity path. Okay, we had the H&S formation after a double top on the French CAC on the 10-minute. As you can see, the market's totally obliterated, even with Greece news and the euro making a low. Obviously, a dollar spiking on talk of interest rate hikes. Even that didn't obviously unfaze this particular indices, and as you can see here, we've obviously pushed higher. So very impressive thrust higher, very impressive thrust higher. We'll see whether or not this is a fake out or a true breakout. We'll have to see. We did have a topping tail and a reversal in the markets. Just obviously are in a very buoyant mood. Okay, that's the French CAC. Now let's have a look at the Eurostoxx 50. See if I can break that down for you as well. Eurostoxx 50. Let's have a look at. So first of all, starting off with this monthly chart. Very interesting. We are into diagonal trendline resistance and into the fib 61% resistance as well. The weekly chart, let's just look at that. Okay, weekly chart, as you can see, we are into the upper channel resistance. So again, very interesting. Okay, we do have horizontal resistance in this region here. Previous support equal resistance, so that's interesting. So keep an eye out for that. Okay, but the most important thing is that we are into that upper diagonal trendline resistance. Daily chart at the moment, certainly no argument there in terms of obviously a move lower. We did have a doji candle, so I was expecting a move or reversal today, and obviously that didn't transpire. 60-minute chart, we are into this upper S3 pivot, S3 upper channel resistance. So again, we'll see and see exactly what happens. I did expect this bull flag to actually fail, given the fact that the US markets were very weak the day before, and that obviously isn't the case. And the markets continued to move and propel higher, which again, very astonishing. But again, it's a tape. Okay, we can think what we want. It's the market that dictates. So adjust with the market, and your stop loss was hit. I was stopped out on the CAC today. I was stopped out on the Eurostoxx today, minus 40, minus 30. So I obviously live to fight another day. So we'll see exactly what obviously tomorrow brings. But I do expect resistance and potential reversal is on the cards from my perspective. And again, it depends on Asia. If I see a weakness in Asia, then obviously I will maintain my bearish bias. If Asian markets are still buoyant and move higher, then I have to adhere to a bullish bias. So obviously resistance at 3575. If we do come back, 3555 will be the pivot support, and we'll see exactly how that transpires on the 10-minute chart. The S&P 350, just bring that up for you. The S&P, here we go. S&P 350 again certainly remains bullish. One can't argue to the contrary. 60-minute bullish, one can't argue to the contrary, and 10 minutes certainly is overtly bullish, so one can't argue to the contrary there at all. So again, you have to respect price action for what it is, folks. But from my perspective, it's a real conundrum. Why? Because either the US markets are lying, as you can see here, H&S formation, we failed to take out the yesterday's high, and this is certainly indicating weakness given the fact that obviously rates are going to rise, etc., etc. Hence the reason why I maintain my bearish bias on the European markets today, because intermarket analysis states US markets are bearish, therefore European markets obviously follow through the next day. And as you can see this pattern here breaking down. You can see the pivot high on the Nasdaq, on the S&P was 2120, and the markets certainly have failed to make a new high today. And you can see, like I said, this breakdown, and you can see the S&P on the 60-minute chart breaking down as we speak. H&S right formation. As you can see, this sell-off that occurred here was on high volume. This consolidation, the right candle is all lower volume. Fundamentals dictate sell-off because the dollar is spiking, given the fact that interest rates are going to rise. And as we all know, when rates rise, it's a risk-off scenario, etc., etc., etc. Okay, so you can see my thought process why I expected a sell-off in the European markets, but that didn't transpire. Okay, folks, risk on, risk off, wax on, wax off. It's whirling dervish time. I need to go and relax mentally now and take my kids there, and it's time to switch off from this world and try and think about a spiritual world. Okay, folks, risk on, risk off, wax on, wax off. Goodbye now.